So we just wrapped up another week in the markets, and I love taking this time off on a Saturday, Sunday to really just refresh, disconnect from the charts. But I wanted to make this video recapping one of the last trades that we sent out through akashx for NAS. And the reason why I wanted to make this specific video is because this was a trade that really tested mine's and really everybody else's psychology when it comes to holding a position. So I think a big problem that, myself as a growing trader and other people have is they have a trade that, initially they really believe in, and then they go into pretty deep drawdown, and then they pull the trigger on closing out the position early, right? But I held this trade. I told everybody, hey guys, like, we're gonna ride this one out regardless of the outcome, right? And it ended up being a very big winner, a great banger type of trade. So I'm gonna be explaining how we actually hold trades, why we actually hold trades, even when we think it's not going to go our way. So let's hop on the charts. So first and foremost, we actually had news on Thursday, unemployment claims, and then also PMI during the early New York session, which is going to be very relevant, obviously, when we're trading something like NAS. So if we jump on the charts, we're going to see how, first of all, with the Liberty strategy, we have this range that we look to trade off of. We saw that early on, we started breaking towards the upside. However, I thought we were already pretty overextended when it came to NAS. So I wasn't pulling the trigger on any buy setups above the range, especially prior to news. And of course, as the news starts to drop around that 9 a.m. time frame, we start seeing that huge dip off in price, which really led to the beginning of me seeing this trade playing out. So what I first started looking at, obviously structure, was that we started shifting bearish, right? We started breaking below this structural low at around 18,860, started making some pullbacks towards that, and then broke structure again for, below the Asia low right here. So a lot of confluence when it came to this trade. Again, structure just pointing bearish for sure. We also had the low of the range breaking here. So a lot of confluence again. Now, I called out the signal for everybody on akashx at 18,820. All right, so our entry came at 18,820 when we started getting this pullback into the range. So we're gonna go ahead and change this to 18,820. And I tend to really stick to a 50-point stop when it comes to NAS, roughly right around here. Okay, so one thing for sure that I didn't really want to see was structure breaking and closing above this previous high. Obviously, structure, we start seeing that we push up, make a new low, retrace, make a new low. So ideally, we would like to respect that high and start getting that movement to the downside pretty much now. And that's not how it played out. And you see the market, you're never going to exactly know how things are going to work. What I did like was that our stop loss placement was right above this old support that eventually could be resistance, and we'll see how that actually ended up playing out. So that was a good safety barrier, as well as this EMA right here that was still above price. So a pretty safe stop loss all in all, and that's why this ended up working. But again, this video is all about handling drawdown, how to actually trust your trade, right? How to actually just let the trade play out. And so we're going to talk about three things that I think are really important for how you hold and why we hold a position, even if it's in drawdown. So again, on akashx, right, our private mentorship program, teaching you on trading, giving you trade ideas, live sessions, and everything. I called out this trade alert, as you can see 2 days ago here. This is Saturday, so this was Thursday. This was the before setup right here. You can see 18,820 with the stops at 18,870. And we had our entry price, stop loss, TPs, and everything set here. So everybody received the alert. We're jumping into this trade. And again, we get a nice little reaction, not too much. And then we kind of start breaking above, sit around the entry a little bit. And here is where we started getting into a little bit of trouble, right? Start seeing price break and close above the high, which is not something I wanted to see. But I'm also keeping in mind that this is a 5-minute time frame, right? 5-minute time frame, you're going to have a lot more breaks of structure and shifts of structure that can really confuse you if you're somebody a little bit newer to trading that wants to understand market structure and whatnot. If you're on small time frames, you're going to be very confused about why structure shifts so much. So just kind of scaling out to higher time frames, even something like the 15-minute, the 1 hour, the 30-minute, we still see that overall we have definitely created a very strong shift in trend, right? Where we started pushing up, 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 and we shift the structure below here with the anticipation that we can come lower. So don't ever let the smaller time frames really fake you out much. The higher time frames at the end of the day are what is going to carry the most importance or weight, right? So number one, when it comes to the three things that I wanted to talk about why we hold a losing position and trust the trade, is that you have to understand that you are going to get price doing things that you don't always expect. And if you're constantly changing your mind, you're going to end up taking more trades than you have to. And what I mean by that is you're going to initially go for, let's say, a sell here. You start seeing price shift. So now you're like, oh, well, should we go for buys? And then you get into buy positions. And then the sells probably start working out. And so you end up just taking positions on both sides of the market erratically without much of a thought process, because you're just going off of emotions and what you're currently seeing printing on the chart. And that's just a bad way to trade, right? If you have a directional bias, if you have something that you already see up front, you got to stick with that, at least until the trade fully proves you wrong, which would be hitting your stop and then letting price develop from there. So we're going to see again, price come into drawdown, get close to stop loss. Here we start respecting this support turn resistance potential right here. And we get a nice little rejection. Price starts to come down, come back towards entry, respect that level again. And here is really where I started saying, okay, we should be in good shape, because again, we've already touched this point twice. We still haven't invalidated the trade at all. And now we're actually starting to head into profits after all of that. So that was a really good news for that trade, at this point. And then here we started smacking TP level 1, TP level 2 right around here. And from here, again, we're pretty much covering our positions to break even, making sure that we don't have price reverse on us and actually take us out of the trade. And so if we continue to let this play out, we see that price starts melting towards our final targets and even past that, right? And so there was actually a lot more profit potential than the last listed TP price. And I actually talked about this on a prior video that you can find right around here or here. And you can click on this link and see how we actually turn a 3% winner into something like a 4 or 5% plus winner. So that's a whole different discussion. But as far as this trade, again, it's about trusting your analysis. It's about saying, hey, we were close to stop loss, but at the end of the day, we had that stop loss set for a reason and it ended up holding, right? So really, we talk about risk management, we talk about technical analysis, but we all know that one of the biggest pillars to successful trading is how you work on your trading psychology, right? What is your ability to execute under pressure and make the right decisions continuously? And pulling out of this trade right before stop loss is something some people might do, but for what? To save you an extra less than 0.5% on a trade, right? Assuming you're risking 1%, you're going to close 0.80%, right? It just doesn't make sense. At that point, let the trade go, because you have scenarios like this. Now, I'm all for somebody that cuts a loser if you're, in profit and you don't move your stops to break even, and then the position starts to come at you, then fine, close the trade with half a loss, right? It's very unique, specific situations where you can do things like that. But if you're just entering the trade and it's pretty much going against you right away, you have that stop loss set for a reason here, and you have to learn to trust that trade, because if you don't start to trust your analysis, guys, you're going to continue to doubt, and you're going to end up switching your strategy. You're going to put yourself in a bind, and you don't want to do that. Now, the biggest thing that I'm going to tell you, right? We talked about, reason number one of trusting your trade is if you start jumping into positions that go against your original one, you're going to start over trading, and it's basically going off of emotions, which you don't want to do. The second one is very simply put, if you have a stop loss set somewhere at some point, you already were accepting the risk. And if you don't accept the risk, you were never really willing to take the trade. because you're assuming you're going to win. You're assuming that you're always going to be right. And we know that's not how trading works. You have to assume by the risk that you're putting on the table that you might lose, and you're okay with losing that. So if you truly are okay with losing that trade, then hitting that one stop loss on that one specific setup shouldn't bother you. Hence, let the trade go, let it play out, because you have your strategy, you have a reason why you entered and where you have your stops. So until that stop is hit, what has changed? Absolutely nothing, except you staring at your, trading platform screen in red and getting upset and wanting to just end the torture, right? And that's what happens, guys. So that's the second biggest reason for sure. Now, the third and most important reason why you need to trust your trades and allow them to play out is simply because if we are looking at our trades how we're supposed to be in terms of probabilities and sample sizes, we're going to be messing up with the ratios that maybe we planned with, our risk formula or whatever the case is that you have set in place, where we know, hey, out of, let's say 10 trades, we're going to win 5 out of 10, just half of them, right? But our average risk to reward is going to be anywhere from 2.5, 3-to-1 risk to reward. Then what if this ends up being one of the winning trades that you cut short, right? For me, I like to say, hey, look, we're either going to take a stop loss at -1%, we're going to be up at least 1R and then hit break even, or we're going to smack a 3-to-1. I usually rarely ever try to close a position at 1-to-1 or 2-to-1 when I've planned for a 3-to-1, because I know that, again, back testing the strategy, seeing how price has historically played out with our entries, that the trade's either going to smack 3-to-1 plus, or it's going to be a break even or a stop loss. Yes, there are certain situations where it goes for a 2-to-1 or a 1-to-1 and reverses, but I'd rather just, again, take the break even and keep what I've planned, in motion. Because if I start closing positions 1-to-1 or 2-to-1, and then it ends up going for 3-4-to-1 plus, now I'm messing up with my ratios that I have planned. And so your P&L is not going to be what you projected or what you back tested or what you've practiced on a demo. And that's not going to work, right? In the long term, even if you are somewhat profitable, you're probably cutting how much profit you could really make in a week, a month, a year, because of that one habit, right? Something like closing partials too early, something like closing positions too early. You could still be, again, profitable or winning, but you could have probably made double, triple, or more if you were to just trust the trades that you have set. Now, obviously, this is assuming that you've already developed a system, an edge, you've back tested it, forward tested it, and you're actually live trading your strategy, right? But some of the biggest details get overlooked, which is, again, trusting your trades, letting them play out to what you assume is going to happen, whether it's 3-to-1, break even, or -1%. That's really the formula that I have set in place for me, my students, Liberty, because, again, it's something that we've already kind of studied in the data, and we have to basically trust in the data to get the maximum result we can out of the strategy. I hope this encourages you guys to start trusting your trades more. If you enjoyed this video, please make sure to like, comment, subscribe, and turn on those post notifications for any future videos that I drop on here. If you want to get access to my private mentorship program, the trades I send, all of my exclusive content, the links will also be down below in the description. Appreciate you guys. Hope you have an amazing day, and I will see y'all on the next one. Let's go.